This is Rick Rule for the Natural Resources Investment Symposium, July 7 through 11 in Boca Raton, Florida, or via live stream from the comfort and convenience of your own home. We're doing these interviews to familiarize attendees with the exhibitors and the speakers of the conference so that attendees can be better prepared to get full advantage of the conference. The conference, as you know, either live or live stream, involves 50 hours of programming over 4 days, more than you could possibly consume on site. And so you're going to have to prepare yourself ahead of time and then, frankly, review the tapes afterwards to get your money and time's worth out of the conference. I have the good fortune today of interviewing an old friend, at least a friend of long standing, a person whose family I've done business with for 40 years. Jonathan Goodman, CEO of Dundee Corp. I'm delighted to say that my first incarnation with Dundee Corp, when it was spun out of Corona many, many years ago, generated a almost unbelievable return for my clients. If my memory serves me correctly, from about 70 Canadian cents to 40 Canadian dollars. I would be lying if I said that all of my clients held onto the stock that long, but that was their problem, not a problem of the Goodman clan. Jonathan continues the great work that his father did on behalf of investors. So, Jonathan, first of all, welcome. Thank you for your efforts on behalf of investors, and thank you, too, for your sponsorship of the Natural Resources Investment Symposium.
Thank you. Pleasure.
To begin with, Jonathan, so that people care what we have to say later, tell me something about your background. Tell me how you came to be where you are today, and very briefly what you've done in your career.
Well, starting with, I went to the Colorado School of Mines, where I got a degree in geological engineering, really focusing on mineral exploration, which was my goal at the time. As you know, my father was always involved in the mining business, as well as oil and gas. And I actually started my career, because I graduated in 1984, in the oil and gas patch, because the mining patch was very slow. But I moved over to mining and ended up getting an MBA and a CFA, and eventually became a portfolio manager of the dynamic funds, as well as a closed-end fund, BGR Precious Metals, which that fund, we actually converted it to an operating company, we bought the assets in Bulgaria and became Dundee Precious Metals, which I built up. I was the CEO up until 2013, and then I went on as executive chairman after that. And that company has done very well. And in 2018, I came back to Dundee Corporation, which had needed a bit of fixing at that time, and we've worked through that. And for the first time ever now, we're completely debt-free, preferred share-free, and moving the company forward with plans as a significant investor in the mining industry.
My former colleagues at Sprott, now SCP, tell me that Dundee Corp does among the best buy-side due diligence in the world. An extravagant claim, I think. Tell us something about what you're doing at Dundee Corp. Tell us something about the basic value proposition, and tell us what sets you apart from other publicly traded quasi-merchant banks in natural resources.
Well, it really is the due diligence process that sets us apart. I managed the Dundee Precious Metals closed-end fund for 10 years before I converted it to an operating company. And what we found was, by doing some due diligence, some real due diligence, you could actually separate the good investments from the ones that were less good. And it gave you the ability to take larger positions, because you were de-risking the assets. You had the comfort in the asset being the thing that was lowering your risk. What we do at Dundee Corp is we've taken it to the next level. And by the next level, I mean I brought the team I've been working together with at DPM, the core of that team being Dr. Julian Barnes and Adrian Goldstone, guys who I've worked with for over 20 years. And for most part, we sign a CA and actually download the company's database and rework the data ourselves. We rework the resources. We do our own bid ops. We do our own valuation. So we get comfortable that there is an asset here that is something that's going to eventually get turned into a mine, which gives us the ability to take much larger positions and work with the companies to help them realize the goal of de-risking that, and hopefully eventually to participate in the cash flows down the road.
Give me a couple of case studies. Show me how this works. Tell me some companies that you've identified early on and helped mature, and then hopefully turned into cash or turned into bigger, more valuable positions.
Well, the first one is a company called Big River Gold Mines. It was an Australian junior, didn't trade very well. They had an asset in Brazil, and the stock was trading at probably 25% of NAV. We did our work and helped the company. We brought in a bunch of technical experts that we had worked with before, consultants, and helped them reframe their feasibility study so that they could actually create a proper value proposition for shareholders that made sense. And we were then approached by Aura, which was it's a Latin American Brazilian mining company, and I believe it trades on the TSX, and it's based out of Miami. And Aura, when someone comes and says we're prepared to pay a premium, when your stock's at 25% of NAV, a 40% premium is at 35% of NAV. It doesn't get you that excited. So what we said was, why don't you buy the 80% we don't own? And we can work out some type of a deal on how to participate in the future. And we looked at participating as a 20% joint venture partner, but truthfully, we couldn't really come to terms with their banks. So we eventually converted that to a 1.5% NSR on the first 1.5 million ounces and a 1% NSR on the next 500,000 ounces. And, that thing, even though we've only invested about, 17 or $18 million in it, we still carry it at book value. That thing's going to start making us, around $5 million a year starting next year. And it'll go for the next 10 to 15 years.
And give me another one. Maybe tell me the Reunion story or tell me the G mining story. Another one where you took a big position and helped steer it and enjoyed either a successful effort or at least a quantum increase in your NAV.
Well, Reunion is the easiest one to tell. It's it was a company that was languishing. We got to the point where we got on a phone call with them. They had a joint venture with Barrick, which we didn't like. We hated that joint venture and told them, and we were basically had the call, and the question was, give me a reason not to sell whatever position we have here. And I was with Justin Vandertoom on the call, and Justin basically said, well, this one project that we have is called Okco West. We did some trench work, and we actually sat there on the phone and we, basically did the math and took the trenches and kind of figured them out and said, if you can drill kind of 75 to 100 meter holes in this stuff, you can delineate 400,000 or 500,000 ounces, which would be mostly saprolite, which is a very soft rock that's easy to mine and very cheap to mine. You could generate something that had real significant value there. So we actually gave them the money to start that drill program and brought in a few other people with us. And that was the discovery of the Okco West project, which got sold to G Mining, and G Mining bought it with their shares, and the company has since been revalued, and I think our investment was somewhere around $20 million, and we took out well north of $100 million on that one. So it worked well for us.
Now that we have a sort of background of how it works, and more importantly, the fact that it works with some real examples, tell me something about the value proposition. What's the company selling for? What do you reasonably think it's worth? What does the balance sheet look like? Hint, the balance sheet now with the retirement of the preferred and the extinguishment of the debt looks pretty good. But tell us something about the investment proposition around Dundee Corp.
The value proposition is actually pretty simple. If you take the market value of all the assets we hold and divide it by the number of shares outstanding, you get somewhere between probably $3.50 and $4.25 a share. And we have no debt. We have no preferreds. We've worked very hard to fix this company and de-lever it. We have a deal closing in around the middle of April, which should bring in another $25 million in cash. So we're going to be fairly well cashed up. I expect to be north of $50 or $60 million in cash by then. And we have some very significant positions and some projects we're really excited about. So you're looking at that, and there's a lot of upside, and hopefully we can bring in more cash flow too.
You say that the NAV, at least measured by market quotes, is between $3.50 and $4.25. What's the share sell for? What's the value proposition of NAV to price?
Trading at about $1.90 a share.
Got it. So arguably, you are selling for half NAV, assuming that NAV is measured by publicly quoted securities.
Yeah.
Tell me something about the upcoming catalysts. Tell me something about what you're going to do for me in the next 12 to 18 months. Not that selling me 50-cent dollars isn't a good deal, but tell me something about how the dollar grows.
Well, we recognize that as a perceived holding company, that's kind of why the discount is there. And our objective is to take that away. The way you get rid of a holding company discount is with cash flow. And there's many ways of accessing cash flow. I mentioned the Borborema deal where we turned it into a royalty. On other projects, we could, we could own enough of the company where we can, get them to pay a dividend as they get to the cash flow, or we can just buy a company outright, as long as as their value proposition is still similar to ours, and many are, and buy a company outright and develop those assets and bring cash flow in that way. So, I think that once we start showing a pathway to cash flow, I think there's going to be a pathway to the discount. Now,
are there any portfolio positions that you think are particularly germane, that you're particularly excited about, or that could mature in the 12 to 18 month time frame and generate return for shareholders prior to your conversion from merchant bank to operating cash flowing company?
Well, I mean, the first one is Raton Resources, because they're the closest to cash flow. They actually own a mill. They're fully permitted. They're doing a bunch of what I would call grade control drilling right now, which I believe will de-risk the project. And, that one is going to be very close to cash flow and not require a lot of capital to get there. Other ones, we have a company called Osgold, which is developing a very interesting gold project in Australia. They're at the final feasibility stage. They should have a feasibility study out this year. And the third one is the one that we're very excited about, called Saturn Metals, which is a heap leach project in Australia. And the value proposition is that the Australian market doesn't really get heap leach. And this is a beautiful 2 million ounce plus resource that we believe will have a very quick payback and very strong financial metrics. We own about 17% of the company. And as that one becomes a little more international, I think they'll get the attention of some of the international investors who will see that this is a stock that has, I think, a $70 million Australian market cap on 2 million ounces of actionable heap leach ounces. And of course, the big one that we own is Magna Mining, which is kind of like an FNX lookalike, but an exceptional company. They just bought the Levack and the McCreedy West mine in Sudbury. Those mines not only have nice reserves and resources, but they both have in mine area potential to dramatically expand those resources in a very positive and meaningful way. And there's some really exciting targets because you can see from the neighboring mines that are owned by Vale which zones are and where they're striking on, and they've never been tested. So there's a lot of really interesting upside there.
Jonathan, our audience is international, and some of them are fairly young. So for the benefit of that audience who doesn't know what FNX was and may or may not know about the importance of Sudbury, perhaps you could put Magna Mining in the context of Sudbury, and Sudbury, by contrast, in the context of global base metals production.
Well, Sudbury, in my view, is the greatest mining belt of rocks in the world. It's about a 4-hour drive north of Toronto. It used to be the home to Inco and Falconbridge. And since subsequently Inco was sold to Vale of Brazil and Falconbridge was sold to Glencore, you don't see a lot of things in Sudbury in the public markets because those two companies control the major part of the belt. FNX Mining was a company that I invested in many years ago. I bought the initial stock that I bought at 40 cents a share. And like as Rick outlined, it went all the way to $33. And I will tell you, absolutely, I didn't hang around that long, but I made a lot of money on FNX Mining. And that was a company formed by a man named Terry McGibbon, who was a geologist from Inco, who took some of his favorite properties out of Inco that Inco wasn't planning on spending money on and built this company. And some of these, the Magna story is very similar. Right? Jason Jessup actually worked underground in these mines for FNX for many years. And so his whole team knows these assets in many cases better than the company they're buying it from, because they're buying it from KGHM. And, they've designed all of these drill targets to test targets that in many cases have been known about for many years. But KGHM, when they bought these assets, these weren't the focus of their business. The focus of their business was on the Victoria mine, which they've kept. So, it's always nice to buy smaller assets from a larger company who's hasn't given them the love and care that they've needed over the years. And we see a lot of upside here.
In closing, Jonathan, we ask our customers, the attendees at the conference, to familiarize themselves deeply with the exhibitors before they arrive at the conference. I think the fact that you are from a long line of successful mining investors and you have a global reputation for due diligence, I think there's a lot for our people to be interested in. To the extent that they want to learn more, who do they contact specifically, and how do they contact that person before the conference?
Well, I think you can contact myself or my CFO, and we both do believe that you've got to talk to shareholders openly and honestly and on a regular basis. So we try to make time every day and every week to speak to shareholders and prospective shareholders.
The best possible answer, of course, from a CEO is that you talk to me, the CEO. So you passed that test. How do people find you? What's your contact information?
My easiest way is to send me an email. My email is jgoodman@dundeecorporation.com.
In closing, Jonathan, thank you, and your father, rest in peace, for 40 years of making me look smarter than I otherwise would. Thank you, too, for your ongoing sponsorship and support of the Boca Raton Natural Resources Investment Symposium. I look forward to seeing you in Boca Raton, and I encourage our attendees to reach out to you before the conference so that they can ask you intelligent questions at the conference.
Thank you, Rick.